an associated member of T3 Trading Group, which is a registered broker-dealer and member of the SEC. All trades placed through myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Please pause the video and read the rest of the disclosure. Thank you. Position update, just long SoFi as of now. I think last time I was on YouTube, I was long Oxy as well. I did sell that within the last week or two. I forget when I sold that. But out of that, so just in SoFi for now. All right, so Monday. Was it Monday or Sunday today? I am not sure. I titled the YouTube video, Traders and Algos, Watch the Eclipse, because it seems like that's pretty much what happened today. So, talk about it real quick, but overall, there's not too much to talk about. So, SPY daily chart here. You can barely even see today's candle, but we got a little doji there. SPY finishing up 0.1%. So barely green, but pretty flat. Q's 0.12%. Same thing, barely green, pretty much flat. IWM up 0.5%, even though this seemed to be selling off the hardest this morning, arguably finishing better. Not by a ton, but a little bit better. And then the Dow, same as the others, 0.1%, a little bit green, but pretty much flat. So we came in today with a small gap up after Friday's inside day candle. It was an inside day within a very wide range from Thursday. We're still kind of working off Thursday's guilty until proven innocent, quote unquote, candle. That's what Derek likes to call these, which definitely makes sense. But Thursday we got that sell off, which was a mix of hawkish Fed speakers, although I'm pretty sure the majority of the concerning comments were made by non-voters. I think sometimes algos don't really pick up on the voter versus non-voter thing, really. Just depends if Bloomberg highlights it in red or not, pretty much. But more so the geopolitical stuff with Israel and Iran. And we saw that through evidence, which Derek did a good job talking about last week, with the TLT rising during that. And if that sell-off were to be from the hawkish Fed speakers, TLT definitely should have been going down through that, aka interest rates up, hawkish Fed speak, pushing back Fed rate cuts, interest rates should go up, bonds should go down. But we saw the opposite happen. We saw TLT rising throughout that afternoon session, with defensive stocks, like you saw LMT, a couple of the other ones, Raytheon, stuff like that, getting a really strong bid during that afternoon session. And that was just like kind of double evidence that pretty much proved that sell-off was mostly from the geopolitical stuff, for sure. That being said, Friday, nothing really much happened from that, and we ended up seeing the market get a decent bid back to it on Friday. Let me see if I can pull actually a better VIX chart up just to get a better look at that. Because that UVXC chart is pretty dead and probably due for a reverse split sooner than later, I would think. So here's the actual VIX chart with the ascending wedge that we've been talking about for at least a couple weeks now. It's like 2 weeks ago, we broke down through this wedge, but the market didn't really push up to new highs. This could have been the start of a catalyst for like another either leg up or even the start of a parabolic move up, which also, if we did go parabolic up, the VIX would start to see a bid from that. If the market starts moving more percentage-wise than it's priced in, even if it is to the upside, you will see VIX start to get a bid from that. But we broke down this wedge, kind of chopped sideways for a few days, with the market also chopping sideways for a few days into that Thursday candle. Came down a little bit. It looks like it was last Tuesday. I forget why we gapped down last Tuesday. But then Thursday was when the VIX actually broke through 15. So Tuesday was the gap down. can see the strength in the VIX. Got above 15, didn't close above 15 though. It's only really ever closed above 15 actually once. Yeah, besides these last couple days, we've only had one, I guess maybe a couple back here, but barely any closes over 15 for the not only the entire calendar year, but actually going back to the start of this pretty much historic run that started back in November over here. So Tuesday, nice big candle, actually breaks out through 15, gets up to 17, and then that was Thursday. So then Friday, kind of mixed, little bit of a gap up in the VIX, but it actually did roll over throughout the day, close lower, and then today just a big bleed lower. If you look at like the 5-minute VIX chart, pretty much spent the entire day bleeding out. Little bit of a midday jump, if you will, but mostly just a steady downtrend there. Taking a look at our VVIX charts, looks pretty similar. Big ignition candle from Thursday, doji on Friday. Actually would have thought the market wouldn't have been as strong looking at that candle, but then today came back down decently hard. Is it negating Thursday? No. Is the S&P negating Thursday? No. But it's in the process of possibly trying to. So we'll see with that. Taking a look at just today's action, as you can see, pretty flat open, flat morning. VIX starts to break down a bit throughout the day, so we get up. Then we get that midday VIX strength that we just pointed out. That rolls us over. And then right around here, the eclipse starts to hit Texas and America. And we did nothing all afternoon. I mean, nothing. There was really not much going on today. Couple reasons for that. One, definitely the eclipse. There's definitely people watching that today. It's funny, actually, this little pop and drop right here is pretty much the exact moment when it was finally done for NYSE. It was on the back half in New York. A little bit of a pop, a little bit of a drop at the end of the day. So that's, I guess, one reason why we had a fairly boring day today. Big celestial event, if you will. But then, arguably more importantly, we have CPI on Wednesday this week. So we have a good amount of data this week, important data. It starts on Wednesday with CPI. We have a PPI on Thursday as well. And then also, which hasn't been talked about as much, but we have Fed minutes on Wednesday. It's just Fed minutes. I'm just double checking that is accurate. So we have FOMC meeting minutes on Wednesday afternoon. This is not a rate decision or press conference from Powell. It's just meeting minutes. But sometimes those can move the market a bit depending on, again, the language that's in those meeting minutes. And again, just kind of depending if, Bloomberg picks one headline to highlight red over the other. You get some algos trading off that. But it's really just like a summary of their meeting minutes from their last meeting. So in a way, it's kind of stale data, but we still sometimes get movement off that. But definitely, most importantly, CPI Wednesday morning, which does mean that tomorrow, Tuesday, the day before that, could be another slow day as well. I don't think it'll be as slow as today. Half jokingly, half serious, I do think it was partially slow today because of this eclipse and just people watching it. But yeah, so tomorrow, day before CPI, Wednesday, CPI day. Our last two were, and correct me if I'm wrong, the last two were hot, but then we got one that was in line, right? Or are we still on two that were hot? I think it was two that were hot in a row. I can't remember if we've had a third since the last two hot ones. My brain's a little fuzzy right now. Must have been that eclipse. But obviously markets are watching to see if it's going to be hot, if it's going to be in line, if it's going to be cold. We are once again, for I don't know how many times in a row, this is going on like year 2 of these Fed fund futures overpricing cuts for us. And once again, these cuts are starting to be pushed back. I think it was JP Morgan this morning came out and said now they're expecting the first cut to come in July and not June. If anyone remembers, we were supposed to start cutting, when was it, last September, I think, at this point, something like that. And then we were definitely supposed to cut this past March. Now we were definitely supposed to cut this upcoming June. And now it's looking like maybe not in June, maybe July. Will this cycle of pushing back Fed rate cuts while everything stays intact last forever? Probably not. But it's certainly lasting longer than most people seem to expect. So that's where we're at right now. Pretty sure Jawbone Jerome. Yeah, that's funny. Yeah, I'm pretty sure we've had the two hot CPIs before this, so this will be interesting to see if it is hot at all. So yeah, now I remember 2 ago it was fairly hot and we did get hit down on it. Last time it was a quote unquote hot print, but I think it was 3.2 when the market was expecting 3.1. So it was kind of like, oh, it's hot, but it's only by 0.1. That doesn't matter that much. I guess it depends on sentiment and things like that for when 0.1 matters and when 0.1 doesn't matter. I guess last time it didn't really matter. Time before that, the extra 0.1 or 0.2 did matter. So we'll see. Markets are expecting, I believe, 3.2. Yeah, 3.2 CPI year over year is what we're expecting, which is still, like, even if we get a 3.2 or a 3.1, which a 3.1 would be a quote unquote cooler report, still by only 0.1. That's still not 2%. So does that just lead to another month or two of the Fed saying the same stuff that they've been saying for months, where things are looking good, but they're still watching the data, they need more proof from the data, blah, blah, blah. Honestly, that probably is what it leads to. It's not necessarily what we want or don't want. Makes things less exciting, that's for sure. Less excitement isn't necessarily a bad thing. But I can't imagine anything really changing too much with still a 3% print. Perhaps if this does go on forever, then they change the inflation target, something like that. But they're certainly not talking about that in any way. There's some, speculation from the TV heads that go on TV that say they would consider starting to look at that. We'll see about that though. But again, I think last time we were expecting 3.1, we got 3.2. This time we're expecting 3.2. Unless it's hot or cold by more than, I'd say, 0.2, 0.3, it's probably not going to be much changing at all, besides the Fed funds futures, which should push things back to July in a more real way, I would think, if the CPI is anywhere in line. Whether it's going to be in line or a big surprise, hard to say. I don't really see any big surprises coming. You never know, though. But yeah, so that's the big event Wednesday. FOMC minutes in the afternoon at 2. Thursday, we have PPI data, which will further move things, although usually CPI does move us a bit more. And then there's some data Friday, a little bit, nothing too crazy. University of Michigan stuff in the morning. And that's about it for data. So yeah, definitely just CPI, the big event this week. And that's mostly it. Taking a look at let's see what our list was this morning. So we were looking at take 2 off. I believe Derek was looking at that off that China news. Which I remember looking at this NetEase this morning too, and this thing wasn't really moving at all despite that. Looked like China was allowing some further games to be played or something like that. Take 2 got the upgrade too, I know that, but there's probably a combination of both. That looks like a decent trade in the morning that actually rolled over. Pretty ugly daily candle there, but if you look at the intraday, gap up, falls down right into the 5-minute ADMA. This is a trade that we talk about very, very often on names that we want to go long, but they're gapping up. They're gapping up a bit too much. Look for some type of pivot into the 5-minute moving average. This is what we mean. That doesn't mean you watch it and then you buy it right here perfectly. You still got to have setups, but you watch it, you see this candle come in. Okay, you know that some buying is coming in and it's not just going to sell straight down. You don't just stick bids in and catch a falling knife, but you know, either buy it somewhere on the way up in this candle, or perhaps, you know, you get like a little bull flag here. This looks like a little inside 5, close to an inside 5 that's viable. Ride this trend up a bit, probably get stopped out in the afternoon. Most things rolled over this afternoon, and by rolled over, it was mostly a range day, so not like the end of the world or anything. But probably hard to take a new swing from like a really good trade today. But that's just, it is what it is with the action. What else were we looking at? did have some news this morning. I don't think that really turned into anything, though. I remember some people looking at that. MU raised prices, but this did not trade well at all. I guess you did get that pivot off the, probably more like the 15 looks. Yeah, that's more the 15 ADMA for this pivot. But again, you know, could have caught it, but probably got stopped out. Nothing really too special there. And then Fastly, I remember this getting bull flow this morning, but this also gapped up a lot, which made it hard. This pull, jump, and then pull back down also probably made it hard. If I was watching this and actually trying to trade it, personally, I'm probably not catching this move, even though it worked, but seeing it pull in, go back to highs, and then go back down to lows would make me not like that. I guess he could have got that, though. And then other than that, Tilray reports tomorrow morning. We've been watching these pot stocks. They have woken up for the past few weeks now after the Germany legalization news. That's what really got these started, it seems. That's been out for like a few weeks now, but these pot stocks have been trading pretty well. All squeezing. Tilray, CGC, this ACB had a really big day last week. MSOS as well, which is the American ETF. Been trading well, not as well as those Canada ones, but I guess that makes sense when the news that is getting these going isn't American news. I have no idea if Tilray and CGC are in Germany or anything like that, but definitely woke them up. So Tilray earnings tomorrow. That could give us some of the trade in the morning. And then, yeah, other than that, earnings season is kind of starting this week. We do have some earnings on Friday with the banks to really start things off. So we have Tilray tomorrow morning, Delta Airlines Wednesday morning, and then a couple mixed stuff, random small things. But then Friday, JP Morgan, Wells Fargo, Citibank, and BlackRock. Citi will be in both Citi and JP Morgan, actually. Wells Fargo has been pretty good. JP Morgan and Citibank have been monsters. So those earnings will definitely be interesting. Bank earnings starting this Friday. And other than that, I'm trying to think if there's anything else. No, I think that's all I really got. Definitely a very, very slow start to the week for sure. But you got a big event Wednesday, CPI. You had a big event today. Again, the solar eclipse. So, you know, it is what it is. You got to work with what they give us. And today they did not give us too much. But there is hope for better excitement later on this week for sure. Even tomorrow, I think, will be better than this. That was a really, really slow afternoon. So, yeah, I think that's all I got. Happy to answer any questions, comments, or concerns. I am not an astrophysicist, so if you have Eclipse questions, I would probably ask Josh instead of myself. Let's see what you got. Cody asking, first thing I see is from Cody, RSP, largest volume day to date. Came from a random block trade, didn't do much, but maybe it means some rotation into small caps. Interesting. Yeah, a few blocks went off on that. I probably wouldn't make anything of that volume on those blocks. You never know. It'd be one thing if we were possibly near the bottom of a trend or like at highs, but we're not at highs in this. We're not far off of highs or anything like that. But this trend has already been interrupted, especially after last Thursday. Institutional blocks are really hard to judge. Usually it's someone taking some fund or something taking a position, and then the sell side trader that's working that position is trying to get that position off as quickly as they can without any damage or as little damage as they can. It's a commissions game, what they're doing there for the most part. So those other blocks could just be the first block crossing with someone else as people are trying to get it off their books. Could mean something, could mean nothing. I probably wouldn't read too much into it for now. It is interesting though, actually. It's interesting, but there's not much to do with it for now. So yeah, I mean, the small, I don't know, equal weight S&P and small caps. I get what you're saying, but I don't know. We'll see. Something to note and watch, and something might develop from that this week if we see more of that, or some other blocks in like IWM or something like that. But for now, I probably wouldn't read too much into it. Although it is interesting. I'm glad you pointed it out. We'll see if we get like some RSP flow or something like that later on this week too. That could be interesting. How do you trade the data events like CPI? So yeah, good question. It depends on a couple things. Usually I don't trade the actual event. And what I mean by that is I'm not saying, okay, at 8:30 I'm looking for this CPI print, and if it's 3 point whatever, I'm buying full BP, and if it's 3 point whatever, I'm selling full BP or something like that. It's almost the same way as trading something into earnings. If you have a position in that name that's reporting earnings, maybe you're just doing random gambling. Hopefully you're not doing that though. Whatever you should have, like, just because it's CPI, just because it's earnings, just because it's whatever, if you're swinging something into it, you should have your full game plan in place for whatever happens. So whether it goes down and triggers your stop, or it goes up and gets to an area where you should take profit, whether that happens randomly in the middle of the day for no reason, or whether it happens on the earnings report, or whether it happens pre-market on a CPI report, you just follow that same game plan. It doesn't really matter per se. For new positions, so if again, if you're swinging something, if it's that close to your out where you really can't afford like a 2% down move and you're heading into CPI, you might want to trim risk going into that, but you should know, the markets can move. You should have some idea of a range for what something might go up or down, depending on if it's just the market you're trading, if it's a higher beta name you're trading, if it's a slower, more value type name you're playing, know what you're trading, know how it trades, stuff like that. But it doesn't really matter if you're swinging something, because you should have your game plan in place, and your game plan is probably based on levels and room where, if a CPI is going to make or break that position for you, you're probably too heavy. Just being frank. For new positions going into it, whether it's CPI or earnings or something like that, it depends on where we are, I think, going into it and where we've come from going into it. So this one's going to be a little tricky because we're pretty neutral. We're a little bit off all-time highs. We haven't really had a market correction yet, but we haven't really had a reason for that. Just because, again, something's up too much doesn't mean it has to go down right there and then. But we're not extended to the upside. We haven't had, 3, 4, 5 up days in a row. Or same thing on the downside. We're not, oversold going into this. The VIX isn't super elevated, although the VIX still above 15 going into it is actually a little interesting. We've seen often the VIX be elevated into events because people, they want to hedge their risk. And then the event happens. It's not really that big of a deal, which is more often the case these days. And then when it's not that big of a deal, people have to take their hedges off. That will make the VIX go down, and then we'll actually see, bullish flow from the VIX going down after the event doesn't end the world. I always joke like that, but it's kind of what it, not what it seems like these days, but just, again, people hedge up for an event. What if this is like the one that breaks us or something like that? And then it just keeps not happening over and over again. Maybe this time's the case. Maybe we get a 3.5. If we get like a 3.5% print, that'll surely shake us up a bit. But so we're not really oversold going into this. We're not really overbought going into it. We're pretty neutral. So it might be a little hard. So when if we're overbought or oversold, I'm probably looking at the counter on that on an event like this, where, if we're overbought and everything looks perfect, but we're already overbought going into it, that can be about like a sell the news type of event where, hey, everything looks good, but why aren't we going up? Oh, because we're overbought going into it. I mean, buy the rumor, sell the news. Same thing with oversold. If everyone's, we're down and everyone's very fearful and the VIX is elevated, and then it comes out and it isn't the end of the world, people have to unwind their hedges. That can create a short squeeze. So like if we're oversold going into it, I'm probably looking to buy. Neutral going into it is hard. What we'll probably do is look for clear levels of either breakouts or breakdowns. But the problem that I find when you're neutral going into it for the breakouts or breakdowns is, unless it's a little bit of a delayed reaction or the first reaction's wrong or something like that, sometimes it can be hard to chase it just because the algos are so fast. So for example, one that comes to mind is this Apple that I keep watching be under 170 and look really bad, but not really break down. It seems to me that someone is, kind of starting to soak up the bid on this Apple a bit under this 170. So like if CPI isn't really bad and tanks the market, this Apple could be an interesting long back up through either some of these prior lows or back up through 170 or something like that. You got to find like the right, and it's hard with the algos being so fast. You got to find the right level where this has a little bit of room. So like if it's, mid 168s, I could still probably buy 170 fast enough after the number comes out with like a 172 target. It's not like I'm trying to buy 168 spot 60 when Apple's 168 spot 50 going into the report or something like that. Because if you are trying to be that tight, the algos are just going to beat you every time, and then you don't want to chase it. But like Apple mid 168s with a 170 buy with a 175 even price target on a swing, something like that. That could be interesting. If CPI is bad, meaning it's hot, which theoretically is bad for the market. Nothing seems to be bad for the market these days, but theoretically that could be bad for the market. This would be an example where I don't know. I probably wouldn't look to short into this down move. I'd be looking because I'm looking for like that Max Payne scenario. So Apple's been relatively weak. I'm sure short interest in Apple is definitely up. It has plenty of reasons for that, for the short interest to be up, for it to be trading weak. I mean, the news hasn't been good there. But if something looks like it's gonna break down, and it should break down, and it keeps not really breaking down, that can be a signal for the other way. So that's like an Apple, whereas like a Google has been trading really well. But if it can't really keep going up, and 155 keeps selling and selling and selling, and then you get a reason for the market to come down, that could be one to attack. So yeah, kind of a long answer to your question, but it depends on where what you're trading, what your game plan is for that trade, and then where we are going into the event / where we've come from. So for this one, and we've had many a times where either where like everything's looking perfect and the market's up a lot, and we end up even selling on like a good report, because again, buy the rumor, sell the news. Or back in the bear market, we actually bought the bear market bottomed, I'm pretty sure, on a CPI report, which was a hot report, and we were oversold and overdone. Oversold and overdone, or there's no exact measure for that, but if you remember that October where we actually bottomed, we are oversold going into a CPI report, and then the CPI report was still hot, and we downticked initially off that, but then we ended up ripping up and squeezing up, and that ended up being the bottom, because it was just so much fear and negative sentiment built into it. And then when we actually get the event, it's like, well, that was bad, but everyone expected it to be bad, and everyone's been front running that. So who's left to sell, right? Like, that's kind of the market psychology for what you want to try to think about things behind the scenes when you're trading, or especially more so for like swing trading and stuff like that. So that's, how we trade these events. It's obviously not a black and white thing. And this CPI, depends what we do tomorrow, but if we're right around the same place that we are tomorrow going into CPI on Wednesday, it's going to be a little difficult, because we're going to be pretty neutral right in the middle. So yeah, hopefully that helps a little bit. Let's see what Rich N is posting. Earnings insights. Thank you, Rich. Read that later. How many names do I have on my morning watch list / focusing on during the day? Usually, probably like 5 to 10 or so, I would say, with the majority of that coming from Derek's list, which I help work on as well. And then just the basic like big caps I'm always watching, and seeing, is Google stronger than Amazon today, or is Amazon and Google stronger than semis, or is semis stronger than this or that? And then throughout the day, mostly just depends on the flow. I used to be more closed-minded to what I was trading throughout the day, and I would be, looking at, I don't know, AMD or something, and I'm like, I'm trading this AMD today, this technical setup looks good, whatever. And then throughout the day, I'm watching AMD be stuck in a range while I'm posting 10, 20 Tesla, call sweeps throughout the morning, and Tesla's just trending up. And, eventually I'm like, I need to stop doing this. I'm, should probably be more open-minded and kind of follow the flow and follow the money. So I don't know. I don't really have a number per se. It's probably like 5 to 10 or so, but not that the list grows and throughout the day I'm looking at like 20 names or something. I'm looking at any and every name throughout the day, so it's definitely more than 20. For actual trading, I'm probably not doing more than like 5 at a time, and I haven't even had that many on in a little bit. The market not stopping going up hasn't really helped me get new swings in the past few months or so. But throughout the day, I find 3 to 4 to 5. You don't really need more than that. It Prop trading is a little different with that because I can more heavily concentrate capital depending on certain ideas. Which, again, that's different if you're depending on like the size you're working with and stuff. But yeah, probably I'm not really focused like super heavily. I'm about to trade this focused on like more than 3 to 5, I would say. Because I just don't really think it's necessary, and you're probably doing more damage than good at that point. If one of those 5 is better than others, you should probably just buy more than that. Technically, you should probably just buy all of that and not buy any of the others, because that's going to be the best one, right? In a perfect world, that's how you do it. Obviously, in practice, it's not that easy. But yeah, so yeah, I guess that number is good. But I'm cycling through any and every name. Every name that I post flow on, I'm typing up. Every news I post, I'm typing that up. And by now, I can look at a chart and within 10 seconds or so tell you if it's looking good, looking bad, determine if money's flowing there, if money's not flowing there, which, I'm not special. It's just simply looking at the trend on every time frame. That's all you really got to look at. What does your 5-minute chart look like? What does your 15-minute chart look like compared to that 5-minute chart? What does your daily chart look like compared to that 15-minute chart? And that's it, really. Plus the volume, too. Volume helps with that. And what does the volume look like then? What does it look like compared to yesterday? What does it look like on the daily charts in history? Is it normal? Is it elevated? So on. Yeah. I don't want to say I don't look at hourly. I more just I probably look at a 30 more than an hourly. But when I'm looking at that, I'm looking at like a 15 or 30 for multiple days as well, not just intraday. Like if I'm looking at a 30 or an hour, I'm not looking at only today's chart. I'm looking at the past like 5 days or so. So yeah, I do. I used to look at a 4-hour a lot more. I like the 4-hour chart. Lightspeed doesn't have it. I wish it did. I do like 4-hour charts though. I'll definitely look at 4-hour charts when I'm looking at like futures and stuff. Bill says if we're coming from a high IV, you could look for an IV crush. Oh yeah. So what Bill's saying is what I mean with the VIX being elevated going into an event, which it is right now. I mean, the market has calmed down a lot since that Thursday drama, if you will, but the VIX is still above 15. Where this thing closed today, I think it's still above 15, barely above 15 still, but and I guess we're not really quite back to where we came from on Thursday, but on last Wednesday, SPY was trading pretty much right where we are right now on last Wednesday before that Thursday move. And last Wednesday, the VIX was mid-14s. So, if we're in the same place as we were a week ago going into the CPI, but the VIX is higher and CPI is not a disaster, the VIX probably has nowhere to go but down, really. There's no reason for it to go up. Thursday, Fed speak plus the geopolitical drama, it has a reason to go up. But the VIX doesn't just, randomly go up a lot for no reason. You need catalysts for that. So could the CPI on Wednesday be a catalyst again? It definitely could. But if it's not, and people have been hedging going into it, people aren't just going to burn those hedges to zero. They're going to try and keep at least some money back. So that's when you get that like negative feedback cycle, if you will. From David L. Missed a dip buy on Amazon from 180 to 182 last week. Held 185 nicely today. I took a small trade, still high 190. Coming soon, but with the Fed news, hard to tell if it'll push 190. So, yeah. You could say, what'd you say for the 184? I mean, 182, I think, is the, if you don't want to use like 180 as an out, I think you could use 182 to like 180, 150 or so. I wouldn't, buying Amazon like tomorrow going into the Fed or going into CPI, that's kind of more of a gambling type trade, unless your game plan is Amazon looks good and I want to swing it and I have a 190 price target and my out is like buying 185 with a 182 out, that might be a little tight for CPI. It might be a little tight. You'd want to give it more room. If you got swings on going into CPI, you probably have, you should have either a bit of a profit cushion on it, or your game plan is big enough range scale where it doesn't really matter what happens on CPI. If you're trying to make like a double in a name, like, I don't know, like a SoFi, for example, or something like that, it doesn't really matter what happens on CPI, because if you're risking, say, 20% in a name to make 100%, and we get hit hard on CPI and we're down 5%, well, that's just already in your game plan. You're just using that as an opportunity to either buy more or rebuy some more if you already sold it. So for your Amazon trade, and that's the problem too, is if you wait until CPI and CPI comes in and it's good and Amazon just flashes up to like 188 real quick, you're probably going to miss the trade. It's always better to miss a trade than take a loss in a trade. So I'll start by saying that. But I wouldn't overly, don't overly fear an event to block you from taking a trade. Just have the right game plan with the right room built into it. More often than not these days, it seems like it's better to be lighter size and to go for bigger moves. So buying 185 tomorrow afternoon with a 182 stop, it's probably a little too tight for CPI, because this thing could flash down, below 182 on CPI and stop you out. But say, this is just like hypothetical, but say, Amazon, you really like the fundamentals and everything behind it, and you think this thing's going to 200, and if it's going to 200 plus, it's probably going over 200, maybe it's going to 250. Say you're trying to swing Amazon to 250, that's a different story, where you could be buying Amazon versus like 175. There's probably no way it should break down 175. It's not going to do that on CPI, that's for sure. Maybe some horrible news comes in on it, or maybe their earnings report later this month or something. But if you're buying 185 with an out of 175, you're risking 10 points, and you're going for even say 220. What's that, like 35? You're risking 10 points to make 35 points. That's a good risk reward. That's where you probably, you are risking more points. So you should size appropriately for that, aka be lighter size, but go for bigger moves. And that way, if Amazon is 185 and CPI is bad and it goes down to 181, you're just buying more because that's part of your game plan. And if it goes up, well, I mean, you're in the position and it goes up. So, if you don't have enough of it and it goes up, that's a good problem to have. So, yeah, I hope that makes sense, David L. Yeah, it's kind of like, obviously I'm not saying CPI doesn't matter, because obviously it does, but I wouldn't be, you're probably not, you shouldn't be getting out of a position, or you shouldn't be changing a game plan, I think, based on an event. It should probably always just be based on the levels, and once you get in the money a bit, then you can work a little bit with the levels and kind of do half levels, half money management. Sometimes if things move in your favor too much, you don't want to risk giving back 5 points to make one more point. So that's when you can kind of cheat on outs and stuff like that. But other than that, it shouldn't really matter. And whatever happens should be just, again, part of your game plan. And if your out is so tight, not so tight, but if it's that close and you're nervous that it could blow through your out, and if it does blow through your out, it's going to be a hit that's too big for you to take. Well, one, you're probably too heavy, and two, you should probably just either get out of it or lighten up. Lightening up would probably be the answer there. So, yeah, I hope that helps, David. Trading guidelines and future expectations for DXYZ. Well, Rich, I assume that you're not full BP long or short this. My future plan is to probably not trade it at all. If your future game plan is to trade it, then I would just go back to what I said about, honestly, just more risk and smaller size. If you want to be long this, you probably are not finding a 25-cent setup. I'll tell you that. You're probably not even finding, maybe you're finding like $1 or $2 setup, but you're probably going, giving it multiple points to capture over 10 points. On the short side, I don't know. Good luck with that. Will this come down eventually? For sure. DJT came down eventually. That could be a good chart to go back, study what that looked like when it actually did top out. It gave an inside day and down on that. But obviously you don't want to be shorting these things on the way up. And if you are shorting them on the way up, then you got to give, I don't know. It's probably just not, it doesn't really make sense on a risk reward to short this on the way up. Because what do you give it? I don't know what to give this to. 200, 250, 500, 1,000. And I know that sounds crazy, but if you're shorting it at 50 on Friday and you're giving it to 100, well, you just got blown out for a pretty bad loss. And it probably doesn't belong at 100, but you got to follow your game plan. So I don't know. We'll see what this thing does tomorrow, but it's over 100. It's up after hours. Probably going to see a gap up in it tomorrow morning. See what it does pre-market. I'm probably staying away. Rich, I'll leave that for the Cowboys like yourself. Most are privately held. Thanks for that too on the 30-minute info, Rich. Yeah, I do know that TradingView candles are a little weird sometimes. Let me check YouTube real quick, see if there's anything there. Sorry to pull that up for a second. Yeah, a couple people. Hey, Sebastian, how are you? What do I think about shorting Apple at the open when it broke the inside day low? So inside day yesterday, aka Friday, 198.95. Call it, or sorry, 168. Call it 169. Looks like Apple gapped down this morning. So you had a little bit of downside extension. Where's my mouse? There it is. So you're gapping down basically right into that level. I don't hate the idea. I take right off the open trades can be a little bit difficult. I find these days, obviously, especially when it's gapping in that direction and you have that possible gap fill against you. So you just got to keep those tight. So do I hate that idea? Not at all. Apple's in a downtrend on pretty much every single time frame. Inside day, red day on Friday. So I like the idea, and you probably didn't have to actually take too much risk here. But say that you did have to take like that, like the opening high a day for Apple is, I don't know, over 50 cents away or something like that, and you don't want to take 80 cents risk in Apple, which can be a lot, can be not too much, depends how it's moving. 80 cents is decent for Apple risk. I feel like you can usually find 50 cents or less in this thing. But I think everything about that trade looks good other than just the gap fill possibility, I would say. So if you're shorting it, you probably had to hit it right away. If you took your eyes off or blinked, then you might have missed that. And then it looks like it actually held that high all day today too. So you could have done okay with that. Yeah, I mean, that's a good looking trade. Technically, fundamentally, I mean, Apple's Apple, so you probably don't want to be short it forever. But for now, the favor is definitely to the Bears there. So yeah, I like everything about that trade. Um, yeah, I like it. And you definitely even could have gotten back in somewhere around the 5 minute equilibrium. Apple doesn't always trade cleanly, but it often does, so it's nice. Usually you wouldn't see this. You'd see some shakeouts here or there, but that opening high held, this high held into equilibrium, and then this high held this high as well for another lower high. So you could have gotten in there a couple times actually. But yeah, everything about that trade looks good to me. So I like it. Hopefully you caught some of that action. Gabriel thinks it's going to be lukewarm CPI. A comfortable lukewarm. We'll take that. Yes, I did make this title, Joshua. Hopefully it gave you a chuckle. And yeah, Terfra on YouTube also had a very slow day. Yeah, I think everyone did. Thanks for that, Rich. Yeah, looks like I got through everything. A little after 5, so still a decent meeting for a really slow day. I will take that. I always find that when I don't have too much to talk about, we still end up talking a lot, so it's good. Time flies when you're having fun, as they say. So that's it. Solar eclipse day. The world did not end, so that's good. CPI on Wednesday. We'll see what happens tomorrow. I think it should be a little bit better tomorrow than today, but definitely could still be slow. So probably don't be ready to jump the guns quite yet, but we'll see. You never know. So have a good night, everybody. See you guys tomorrow morning. Take care.